What's up, YouTube? It's your boy Will Motivation, back with another video with some knowledge. Yo, what's up? It's your boy Will Motivation, and today we're talking about my advice on the #1 way for you to get started investing in real estate. If this is your first time tuning into the channel, my name is Will. Channel name is Will Motivation, and on this channel we motivate people with wheels, cars, that kind of thing. A lot of people subscribe because they like the Lamborghini, but a lot of people also subscribe because I drop free knowledge on investing and entrepreneurship, and in this video that's what I'm going to do. We're talking about how much money do you need to put down in order to buy a house or an investment property. So let's jump right into it. So let's talk about the most common scenario for someone that's trying to buy a home, and what type of loan they would typically get and how much they'd have to put down. So the most common loan scenario in the United States, and actually when I bought my first home, this is what I did, and that is what is called an FHA loan. And with this loan, you only need to come up with a down payment of 3.5% of the purchasing price of the home. So for example, if you were buying a house that cost $100,000, you would need to come up with a down payment of $3,500 minimum. So the more money you come up with to put down, the lower your payment will be. However, one thing that people don't like about FHA loans is that you have to pay mortgage insurance. So what is mortgage insurance? So mortgage insurance is basically it's just what it sounds like. It's an insurance amount that you have to pay every month as a part of your mortgage payment that insures against you defaulting on the loan or not paying off that entire loan to buy that house. And so you pay that insurance, and it kind of insures the housing administration and the banks that partner with them, that they'll get their money, and that's where you pay that insurance. So that's what an FHA loan includes. So the benefit is you have a low down payment, but the con, if we're looking at pros and cons, the con about that is that you've got to pay that mortgage insurance. And so how much is mortgage insurance? I think it varies depending on how big of a house you have or how big of a mortgage you have. But like for example, on a $160,000 house, I think my mortgage insurance was somewhere around between 100 and 200 bucks a month, something like that. So, so if you're an investor and you're wondering, can you take advantage of this low interest rate? Actually, that first home that I bought that was on an FHA loan actually is now an investment. So with FHA, I don't think there's stipulations. Somebody, if there's a realtor watching, Rich, correct me if I'm wrong in the comments, but with an FHA loan, I don't think there's stipulations on the owner having to stay there for a certain amount of time, but there might be. So you might want to look into that, or talk to your realtor, or talk to your mortgage banker. So that's the first type of loan I wanted to talk about. But the second type of loan is what is called a conventional loan. And so with the conventional loan, you typically are paying more than the 3.5%. You're paying a minimum of 5% down. So if we take the example of a $100,000 house, you got to come up with $5,000 as a down payment. But you might not, after like you pay 24 months, you don't have to pay that mortgage insurance. So your payment could be a little bit lower. And it's a little bit more efficient, right? So you don't have to pay that mortgage insurance. But there's some stipulations on that, so you'll have to just check with your bank where you are and make sure how soon you can have that loan without the mortgage insurance, or how much money you have to, or how much equity you have to have in the house. Because I think you have to have 20% equity in the house, and then you don't have to pay that that mortgage insurance. So there's some stipulations on that for a conventional loan. And actually, if you're an investor, you can get a conventional loan and pay 5% to buy a property. But usually the banks only allow you to do that so many times, like only allow you to have these residential, conventional, I'll call them personal mortgages for personal residences. They only like to see you have like 3 or a maximum of 4. I've heard of some people saying they could go up to having 5 different personal home loans, like with the 5% down, that kind of thing. But when I was getting those types of loans, there was a maximum of 3. So I had my primary residence, I had my residence, like my first home that was on a conventional loan, and then I had like a vacation home, or actually it was not a vacation home, but that's kind of how they look at it. Like the average person might have 3 homes, not the average person, but somebody who's doing well and legitimately not as an investor, wants to have 3 different homes and 3 different mortgages. They can get these conventional loans, pay the 5% down, and then get 3 different properties, right? But investors, of course, it makes a lot of sense for investors, if you're trying to get in the game, to pay that low down payment so that you have more money to invest in the rehab of the property to get it up to spec. And your mortgage payment, your mortgage payment, the lower the down payment, the higher the mortgage. So I was getting ready to say the mortgage payment was going to be lower, but that's when you have a higher down payment, the mortgage payment is lower, right? And depending on the terms, like how long the loan is. But one of the things is different banks allow you to stretch the loans out for different amounts of time. So I have some loans that are 10-year loans. I have some home loans that are 15 years. And then I had like one that was a conventional loan. I bought a house. It was a more on the higher end as far as expenses were concerned, of how much the house cost. And it was, I financed it with 5% down and for 30 years to keep my mortgage payment low so that I can make a profit every month renting it out. And that's not the only type of loan. So you got conventional loans where you pay 5%, and the other one is if you're a military veteran, they actually you can get a VA loan. And so with the VA loan, there's potentially 0 down payment to get into your I don't know if it's your first home. I don't know what all the stipulations are, but if you're a military veteran and you have not taken advantage of the VA loan, that's something definitely to look into. And I'm sure like they're gonna probably have some stipulations around it. But you can get with a mortgage banker and a good realtor, and they can explain all that good stuff to you. But that's just something to consider for you military veterans out there. Thank you for your service. But last, but not least, you have investor loans. So these are the loans that your real estate investors are typically getting. They're like commercial loans where you have to pay 20% down, and which in effect can lower your payment. And different banks have different terms and things that you have to look at. So what I advise you to do if you're considering investing in real estate and you're at the point now where, let's say you already have 3 properties that are on these 5% loans or these lower down payment loans, conventional loans or FHA loans. Let's say you got 3 to 5 of those properties and you're starting to get a bunch of properties, or you're looking at getting a bunch of properties. What happened to me when I got to that point is the banks started to say, okay, we see your real estate portfolio and you're an investor now. So our product, our loan product, or our mortgage product for investors requires a 20% down payment. And all of the banks where I am, like the ones that I talked to, I probably talked to about 4, 5, 6 different banks. They wanted 20% down, and there's some banks, like I said, that did 10-year mortgages, some that did 15, and there's some that do 20. But I usually did mine for 10 years or 15 years, and I had to come up with 20%, and that's what they consider a commercial or an investor loan when you come up with 20%, and that's pretty much the standard for investors. So if someone was to ask me on the street, and I'm actually answering this question, let me give them a shout out, because they actually sent me a request on Instagram to answer this question. You know, the question was, how much money do you need to put down? And so this was from Alpha Sapien 1906 on Instagram. So the question was, how much do you typically need to put down on an investment property to get started? And when do you think it will be a good time to start looking for an investment property? I just wanted to say thanks for watching today's video. There's a lot more to come. Hit that like button for me and subscribe to my channel. A lot of you guys have been asking me about when is my online course going to be ready. Well, I have good news for you. My online course is completed. I'll put a link in the description of this video where you can click on that link and get a 40% discount off the course. That'll be for the first 50 students. So if you're ready to take the online course that I've basically laid out everything that I know about how to invest in real estate, click the link below or just go to www.willmotivation.com/invest. And thank you guys for taking the time out to watch today's video. Hope you learned something, and I'll see you in the next one. Peace.